Hello, everybody out there. Gabe Elton here with the Austin Report, sitting in for Charlie McGrath of Wide Awake News on the one and only Rinse Radio Network. Looking forward to tonight's show. I'm going to be checking the chat room, and anyone that would like to call in, feel free to do so. I'll also try to cover your questions there in the chat room as well. The title of tonight's show, I think, should be "The Sheep Are Being Fleeced." I can't decide between that or defy the herd, because the powers that be are herding the majority of U.S. citizens and really the majority of the world into an area in which they are easily going to be fleeced. And I see it more and more every day, and I'm going to share some of those experiences with you guys tonight. I don't know if you guys watched the gold market today. Gold took a big turn upwards. It was up $20 just today. Silver was up over 27 cents just today. And I started thinking about this, and it's kind of confusing, because you say to yourself, for what? Why did gold go up $20 today? Why did silver go up 27 cents today? Nothing really changed between today and yesterday. And it goes back to the herd mentality. What's going on in today's financial world is proof positive, a herding and a fleecing of the sheep. The sharks are taking advantage of you. And it's got even the most enthusiastic gold and silver buyers and supporters wondering if they are on the right side of history. You know, the stock market has been doing fabulous, unless you've been watching it this week or last week for that matter. And a lot of these people are being herded from precious metals back into stocks. I'm not talking about some of the better connected people that we have here. I'm talking about the average person, the average senior, really, 60s and above, are starting to move and start to wonder if maybe they have been wrong about buying gold and silver in the first place. And I'm going to share that with you guys tonight. But why did gold go up $20 today? Nothing changed. The fundamentals are the same. And I'll tell you why. It's because high-frequency trading, which is manipulation at its finest and front-running, it rules the financial world. And they admit that out of all the trades that occur on the stock market, upwards of 50% of those transactions are completed by high-frequency trading. And I bet you're asking, what does that have to do with gold going up $20? Well, what it has to do with is these high-frequency trading platforms are programs and software that can trade billions and trades in a very short amount of time. They're way ahead of the average investor. By the time you actually figure out the real price of a stock, they've actually traded it, hundreds of times. Well, those things also know how to read headlines. And a headline came out today, and the headline was that NATO expects Russia, an incursion is the exact wording that they used. They didn't say an invasion. They said an incursion of Russia into the Ukraine. Now, said that was likely. Now, I don't know, but I'm going to go out on a limb and say if you're hearing my voice, you figured that was likely yesterday. You figured it was likely last week. And this market has become so headline dominated, has become so dominated by high frequency trading, that a simple headline calls everyone to go out and make trades. First, it's the HFTs, and then it's all the lemmings that follow them. And they're the ones that are being fleeced. And the reason for that is because nothing fundamentally changed. Gold and silver should be trading for much higher than it is today. But the fact is that people are being fleeced, and the only thing that is affecting gold and silver at the moment is silly headlines like NATO expects an incursion from Russia into the Ukraine. Now, if you have any common sense whatsoever, you knew that was likely probably more than 30 days ago. But the very fact that someone from NATO uttered those words, well, gold went up $20. It's the same thing as whenever you have the Federal Reserve releases their open market committee ideas, and everyone goes out and trades, and gold might go up $20, or gold might fall by $20. Silver might fall by 50 cents based on the headline of something that the Federal Reserve might have been considering in a language that is so opaque you don't even know really what it is that they're trying to say, and that's done purposefully. But then everyone goes out and trades on that information as if the Federal Reserve has any tools left in the toolbox. And that's the problem, is that these people have no substance. NATO has no substance. The Federal Reserve, it doesn't matter anymore. They're basically, as I'm going to get to an article later on tonight, baggage. People around the world look at Federal Reserve and the U.S. dollar as baggage, our regulatory burdens as baggage. And we think that for some reason that we are still able to print money to no end, increase our debts to no end, and that the Federal Reserve is going to save us all. And everyone goes out and trades based on the information that they hear from Janet Yellen, and before her it was Ben Bernanke, and before him it was Alan Greenspan. But the fact is, these guys are done. The Federal Reserve is finished. We are morally bankrupt, and we are also bankrupt in black and white on paper. And that's something else I'm going to share with you guys tonight. I've got 3 different articles that I wanted to cover. But, it goes back to the saying is, don't be a sheep, defy the herd. And the reason why I tell you that is because don't let the headline reading algorithms decide what you're going to do. And the most important point of all of this is that markets are often wrong. Someone asked in the chat room already, is when is silver going to go up? And I mentioned that's a great question, but the time is on our side. And here's the reason why time is on our side. It's because markets are often wrong. Markets are often short-sighted. The movement in gold, I'm not going to come up here and say that's ridiculous that gold fell today, and not come up here the next day and say, well, that's ridiculous that gold went up. Gold went up today, and it was for ridiculous reasons. It's because something that all of us knew long time ago, that, it is very likely that the violence in Ukraine is going to spread. It's very likely that these events could lead to a third world war. It doesn't take a NATO spokesperson to tell me that, and Bloomberg doesn't have to print it to prove it. But yet, that happened today, and that's the main reason for gold going up $20. It's the most ridiculous thing. Gold should be, like I mentioned before, much higher than it is. So I'm certainly not upset that it went up. I'm just saying that the fundamentals from yesterday haven't changed a bit. The fundamentals from 2011, when gold was $19.50 and silver was over 40, they haven't changed a bit. And so when people say, why isn't silver going up? I say you should be thanking your lucky stars that it's not, because time is on our side. And I think that time is going to prove us right. You just have to stay away from the high-frequency trading algorithms that are headline-reading maniacs. Do yourself a favor. And this potentially will be very profitable for those of us who are right when the market is wrong. And that is what is happening today with gold and silver. The market is wrong, and time is on our side. And be thankful that you have a chance to buy gold and silver at these lower prices, because fundamentally nothing has changed since 2011. Now, I told you I would mention a story about how the herd is never right. And what happens, this is right when things normally change, and right when the tide starts to turn is when sentiment is heavily shifted in one direction, and that's when the masses stand to lose the most. And what I'm referring to when I say that is the stock market. The stock market has done wonders, since 8,000 points or whatever back in 2009 or so. Now, Yeah, it's been a great place to be. Lots of people have made money since 2009. However, it hasn't been looking so great lately, and it's grossly overvalued. And if you measure, the real way you'll want to measure the stock market is measure it in ounces of gold. Right now it takes 11.7 ounces of gold to buy the Dow 30. And there have been twice in U.S. history where the entire Dow 30 could have been purchased with 1 ounce of gold. Peter Schiff pointed this out years ago, and I support him in that assertion and believe that there will be another time when 1 ounce of gold will be able to buy the Dow 30. Now, people look at that and they say, well, what's going to happen to stocks if the dollar crashes? Well, the stock market could go to 20,000 points, but if the dollar is worthless and the stock market is valued in those worthless dollars, what does 20,000 points really mean? And you talk about selective markets and, looking at selective areas of the market regarding the stock market increase from its low till today, when in fact, compared to gold, if you go back to 2001, here's a perfect example. The dollar has lost 35% of its value since 2001. Those are official numbers. And gold is up over 350%. But the stock market's only up about 65 to 70% on a 35% fall in the dollar. So how much have you really made in the stock market since 2001? It's sub 30% over 13 years. Sub 30%. You made 30% instead of 60%, 65%, because the dollar's down 35%. Now, you look at gold, on the other hand, gold's up 350%. So to value stocks in dollars, when the dollar loses its value, it doesn't really matter what the stock market goes to. What matters is how many ounces of gold does it take to buy it. And one of the things that I'll go on the record and say is that right now it's 11.7, and I strongly believe that at some point in the very near future, 1 ounce of gold will buy the Dow 30. And even some of the older clients of mine who have been on board and have known about what's going on geopolitically and in the world for a long time, who have been predicting the downfall of the dollar, either have stopped buying gold. Some of them recently have started selling their gold so that they can get in the stock market. They feel that they have lost out on the big, huge gains in the stock market that really nominally is up 65%, but in real terms is up only about 30% over the last 13 years. Whereas during the same time period, gold's up more than 350% and silver's up about 400%. So there you go. Well, I have some articles for you today. And the first one is from Bloomberg. And, I asked you, why did gold go up today? Well, it's because of this article. U.S. joins Ukraine incursion concern as Putin hits back. And it's on Bloomberg's Business Week by James Neuger. And it says the U.S. joined NATO and Poland in warning about the risk of sending Russian troops into Ukraine. Russia called reports of a military buildup on its western border groundless and hit back at sanctions against it. The threat of an incursion is reality, U.S. Defense Secretary Chuck Hagel said yesterday. Really, Chuck? I'm glad you told us that there's a threat of an incursion. I'm, very grateful to you. It says earlier the North Atlantic Treaty Organization said that there's a threat of Russian troops crossing the border under the pretext of humanitarian or peacekeeping mission. Russia ordered limits on food imports from nations that have sanctioned it. When you see the buildup, and this is old Chucky boy talking again, Chuck Hagel, when you see the buildup of these troops, the sophistication and training of these troops, the heavy military equipment that's being put out on the border, of course it's a reality and it's a possibility. So, of course it is. So the gold market didn't know that yesterday, obviously, because it's up $20 today. It says the standoff over Ukraine is intensifying in the wake of tighter U.S. and European sanctions on Russia. President Vladimir Putin ordering economic retaliation in the form of agricultural import bans. And it goes on to say, it talks about the increase in gold. It says the stock markets fell, gold futures jumped 1.8% on the news. And it goes on, another NATO spokesperson, Uwana Lungescu, said yesterday that the alliance can see what Russia is doing on the ground, calling its troop movements a great concern. It says the latest Russian military buildup further escalates the situation and undermines efforts aimed at finding a diplomatic solution to the crisis. This is a dangerous situation. Poland made a very profound, and that's not their words, that's mine. It's so profound what Poland said. They said that they have a reason to believe the risk of an incursion is greater than a few days ago. So it's just so profound what these people are saying and bringing up as news. And, you know, it all goes back to something that I've been covering for quite a while. I've made it, the cornerstone of my reporting this year. And that is this the beginning of the end of the U.S. dollar? And that's a report that I put out several months ago saying that this Ukraine situation would cause countries to form allegiances and alliances that will allow them to do business without using the U.S. dollar. And forget about the Federal Reserve. Forget about these NATO headlines. Forget about all the things that make gold move on a day trading, high frequency trading platform, and think to yourself, the real basis of buying gold and silver it's an anti-dollar. You're shorting the government. You're shorting the dollar. Well, guess what? The rest of the world is starting to short the dollar too. And I told you that months ago. It didn't take a rocket scientist to figure it out. But now Bloomberg's coming out and saying Russia sanctions accelerate risk to dollar dominance. It's by Rachel Evans. Russia sanctions accelerate risk to dollar dominance. And they talk about how Russia and the sanctions threaten to hasten a move away from the dollar that's been stirring since the global financial crisis. They say while no one's suggesting the dollar will lose its status as the main currency of business anytime soon, its dominance is ebbing. The greenback share of global reserves has already shrunk to under 61% from more than 72% in 2001. The drumbeat has only gotten louder since the financial crisis in 2008, an event that began as in the U.S. when subprime mortgage loans soured and the largest emerging market nations, including Russia, have vowed to conduct more business in their currencies. And it goes on to say that, Joseph Quinlan, one of the guys who spent too much time in school, he's a chief strategist at Bank of America. And he says the crisis created a rethink of the dollar-denominated world we live in. But he goes on to say such a transformation may take as long as 25 years. Well, Joseph, maybe you need to go back to school because the IMF put a plan on their website 5 years ago stating that they want to have the SDR, their version of a global currency, be the next world reserve currency within 10 years. So according to the IMF, we've got about 5 or 6 years for their plan for their particular currency to be the dominant world currency. That's their plan. It's on their website. So Joseph wants you to think that that's going to take 25 years. Joseph Quinlan over there at Bank of America. So that's not going to happen. In fact, it's happening as we speak. And even if you look at the IMF's timeline, it's going to be happening within the next 5 years. So it's time for all of us to forget about these headlines and start buying gold and silver when you can, because it's not any of these things that matter. What matters is the world is moving away from the dollar, and the dollar is losing its status as the world reserve currency. And gold and silver are measured in dollars. So if there was ever a time to protect yourself from something that not something that we imagine could happen, not something that might happen, something that is happening right now in your face, and gold and silver haven't gone up significantly because of it. So thank your lucky stars that you have more time to buy gold and silver. And when we get back from the break, I'm going to check into the chat room and cover some more questions that we might have there. And then I have one other article for you from Charles Biderman over at Trim Tabs. He measures and looks at the U.S. stock market and has some amazing information that I'll share with you when we get back from the break. See you on the backside. Y'all hang in there, and back to the chat room when I return here. Gabe Elton here on Wide Awake News, bringing you the Austin Report, sitting in for Charlie McGrath on the one and only Rinse Radio Network. So I was talking about the Bloomberg article before we left by Rachel Evans entitled Russia Sanctions Accelerate Risk to Dollar Dominance. And I was telling you about the Yahoo Joseph Quinlan from Bank of America, who says that a transformation like this will take 25 years. As others have said, sometimes more things happen in a month than happen in 10 years. And we are living in that sort of world right now. And you can make lots of money in an environment like that, especially when you're ahead of the market. And I really feel that is the scenario right now with gold and silver. And I'll tell you a little bit more about that here in a second. But back to this article, Joseph Quinlan said, there might be a replacement to the dollar. And yes, it is happening, but it's likely going to take 25 years. Well, let's look at it from the rest of the world. Joseph Quinlan's probably was educated over on the East Coast in some Ivy League university. Well, the rest of the world don't really feel the same way. In fact, they're talking about the credit crunch in 2008. They say the crunch increased interest in tenders divorced from a single nation's strength. Some people in the chat room are saying the dollar is backed up by the military, and 100% I agree. I've even said that myself before. But if you look at this particular sentence, the crunch increased interest in tenders divorced from a single nation's strength. Why didn't you just say people are tired of the U.S. dollar dominating the financial world? But anyway, she goes on to say, spurring the International Monetary Fund to boost almost tenfold the allocation of special drawing rights, a reserve asset whose value is based on a basket of currencies, and fueling demand for so-called virtual currencies such as Bitcoin. She goes on to say a $9 billion fine imposed on BNP Paribas SA, which is France's largest bank, by U.S. regulators in June also made some institutions wary of the penalties dealing in dollars can bring. Wary of the penalties dealing in dollars can bring, according to Stephen Englander, the head of the Group of 10 currency strategy at Citigroup. So they go on to say that BNP, which is so BNP was fined by the United States for not following U.S. regulations. They weren't French regulations, they were U.S. regulations. We said that no one could do business with these countries, and because they did, we fined them, as if the United States can tell the rest of the world how to act and what to do. But it says BNP was banned from clearing certain dollar-denominated commodity trades for a year after the lender admitted to violating not French restrictions, but U.S. restrictions on doing business with Iran, Sudan, and Cuba. And finally, they got to speak with old Englander, and he said, you used to think that you had to worry about the Fed and the supply of dollars and the monetary policy reaction function. Now you have to worry about potentially sanctions and other kind of regulatory liabilities. So it's baggage. He's talking about the U.S. dollar. It's baggage, said Englander by phone. If you see yourself on the receiving end in some geopolitical dispute with the U.S., holding liquid dollar assets is risky. We are forcing, and this, I'm done with the article there, but we are forcing the rest of the world away from us. Not just Russia, but also France, also Germany. The French came out the other day and said, why do we sell ourselves fighter jets in U.S. dollars? It's ridiculous. The head of their largest refinery came out and said, why is oil priced in dollars? And he added, just because it's priced in dollars doesn't mean that we can't trade it in our own currencies. And now you have a Citigroup guy who represents their division for G10 currency strategy. And he said people are looking at the dollar as if it's baggage. It's a risky asset to hold, especially if the U.S. might be after you. So, as I mentioned before the break, this isn't something that might happen. It isn't some kind of prediction or projection or prognostication, because it is happening. I mean, I could tell you it was happening a long time ago, but hardly no one would have believed me. But you got to believe it now, right? And I'm not talking to the listeners. I'm really talking to the rest of the world who really puts credence in the mainstream media. You have to believe it now because Bloomberg printed it. Bloomberg says that the U.S. joins Ukraine incursion, and that Bloomberg says that Russia's sanctions accelerate risk to dollar dominance, not Gabe. So if you look at it from this way, everything that many of us have warned about, and if you visit Wide Awake News and if you're in the chat room, you already know this, all the things that we've been warning about are happening. Yet some of the most diehards people, some of the people that were warning about this before I even got in the gold and silver business in 1999, are looking at selling their gold and silver, not just one, but, I can count maybe a handful of people that I've talked to in the last 2 weeks are getting tired of being in the gold and silver market and want a piece of that stock market action. They want a piece of those stocks that have doubled since 2009. Not to mention that gold's outperformed both of them by a factor of 5. By 500% or so, it outperformed the price increase in the stock market since 2001. Never mind that. We need to sell our hard assets and buy paper assets. That's a good time to do it. The world's moving away from the dollar. And Zimbabwe's stock market was one of the best performing stock markets ever. But I have a $100 trillion Zimbabwe note on my bulletin board right here, and it's not worth squat. So what does that mean? And the fact of the matter is, gold and silver historically in every single case have outperformed any paper asset on the planet in terms of hyperinflation and inflation. And that's the reason why you need to look at the stock market in terms of gold. How many ounces of gold does it take to buy it? And forget about this herd mentality. I'll give you one example that I always use, and some of you might have heard it before, but in 1964, a gallon of gas was a quarter. But that quarter was made out of 90% silver. That's before they fleeced the nation. Now today, gas is over $3 a gallon. But you can still buy that same gallon of gas with that same 1964 quarter. Gas would be a quarter if your quarters were made out of silver. Instead, gas is over $3 an ounce. And so what gold and silver do is they preserve your wealth. They preserve your buying power. And that's absent the catastrophic Armageddon that I think is heading our way economically. So absent all of that, gold and silver will outperform and keep your value and protect your wealth. You throw in a situation where the dollar loses its status as the world reserve currency, and we're talking about people who had the foresight are going to be extremely wealthy if and when that event happens. And as I said throughout this show tonight, all the evidence says that it's happening. Not that it might happen, it's coming and it's in the future, but that it's happening now. I mean, like I said, Bloomberg said it, so it has to be true. And I think that the biggest profits in gold and silver are ahead of us. Most people have always pointed out in a bull market, 90% of the profits are made during the last 10% of the time. And if you think that what we saw in 2011 was the peak in gold and silver, I think you're going to be proven wrong. So, got a break coming up. We're going to close it out on the back end. See you guys in 2 minutes. All right, Gabe Elton here with Austin Rare Coin and Bullion, bringing you the Austin Report. I haven't even given out our phone number or website. You can reach our company by dialing 1-800-928-6468. You can also visit our website at www.austincoins.com. That's www.austincoins.com. And again, it's Gabe Elton sitting in for Charlie McGrath of Wide Awake News on the one and only Rents Radio Network. Well, I have another article to cover here, but someone asked me an important question in the chat room that I'm going to cover here. But I want you guys to look it up. It's on Zero Hedge. It's the U.S. is bankrupt. In fact, it was from a day or so ago, so you might have to Google it. The U.S. is bankrupt, blast Biderman. We now await the cram down is the title of the article. And it's from Charles Biderman of Trim Tabs. And he did all the math. And he came up with a disturbing answer that all of us already kind of knew, is that the U.S. is bankrupt. And this is from the government's own numbers. They have $89.5 trillion in liabilities versus $82 trillion in household net worth. In other words, they could take everything that everyone owns, every asset that they have, all of their gold, all of their silver, all of their stocks, all of their homes, all of their holdings, all of their jewelry, everything. And we would still be $7.5 trillion behind on our liabilities, which is technically bankrupt. I don't know how else to put it to you guys, but you talk about it kind of goes hand in hand with the question in the chat room was confiscation. What about government confiscation of gold and silver? First off, all that we can do is base our predictions on what has happened in the past and the way that it happened in the past. I personally am not so worried about a silver confiscation. I think it would take too many resources and dump trucks in order to move all of that silver around. I would certainly be more worried about a gold confiscation. However, I think that we're going to have fair warning because they want the IRA money first. They're salivating over the IRA money. They've already had 3 conferences in Congress regarding setting up what they call a guaranteed retirement account where 15% of the IRA money goes into a government coffer so that they can sell U.S. Treasury bonds to you. And they've had several hearings on it. They want it to happen. I think the day that they come after the IRAs, and I think that day is quickly approaching, is when you really should start worrying about potential gold confiscations, because I think there will be some time before that. But, you know, when someone says the word confiscation, people have these thoughts of a black van showing up in your driveway and a bunch of people getting out and busting in your house and taking your gold. I don't think it will ever, well, I shouldn't say ever be that way. I don't think it will be that way at first, and possibly ever. The way that they did it last time is it happened during a banking holiday. So the banks had been closed for 7 days. And when the banks reopened, there were notices inside of all the banks and post offices that asked you to bring your gold to that location, and the government offered to pay you for it. It's not like they took it and didn't pay you for it. In fact, they paid 10% over market value for that gold. Unfortunately, what it was is a ploy because the dollar was gaining value too quickly. They needed to lower the value of the dollar versus gold. And after they confiscated everyone's gold, within 60 days, gold went up 45%. So that was the devaluation of the dollar. But people ask about this confiscation and how it might happen. I envisioned something where they would come for the IRAs first. There might be some kind of financial catastrophe where the banks are shut down for a week. It might be the fact that there is a new global currency being formed in a portion of that global currency's value will be backed by gold. You know, I did some math not so long ago, and if you took all the gold ever mined in the world and made it 1/8 the value of a world currency, based on the world debt at the time, gold would have to be over $30,000 per ounce if you only wanted it to represent 1/8 of the world's debt. In which case, you might have to, if you're a government, you might confiscate gold. And the only thing that we go by when we talk about confiscation, and by the way, there's plenty of smart people out there, some of my friends, who say that a gold confiscation is unreal and that it'll never happen. In fact, I would invite you to come to our website. I wrote an article on this subject, and it's entitled, "Will Gold Be Confiscated?" And I believe it's in our Learning Center, and if not, it's certainly somewhere on our blog. You can probably find it via Google. And that is, will gold be confiscated? And in there I say, there's a lot of smart people who say that'll never happen because the dollar's not backed by gold. Well, what if at some point there were a new currency that was backed by gold and they needed that gold in order for it to represent a certain portion of that new currency? So the same reasons why people say gold won't be confiscated are the same reasons why you could also say gold will be confiscated. However, what we focus on is there, and I've studied this in and out for a long time, the subject of gold confiscation. And there are two instances in the law that gold confiscation was covered after the gold confiscation. So in 1933, they confiscated gold. You could have kept your gold. They weren't coming to your house to get it. You brought it in, they paid you for it, you could have kept it, but after this date, if you got caught with the gold, or if you got caught buying or selling the gold, it was $10,000 or 10 years in prison. So people say, I'm not going to turn in my gold. Well, the government makes it pretty much useless, and the only way that it can be traded is on the black market at a significant discount, because of the fact that there is risk of a 10-year prison sentence or 10-year fine. So those people who kept their gold and didn't enter it into the black market, it wasn't legal for them to sell their gold again until 1974. They had to keep it from 1933 until 1974. However, between those times, people were buying and selling gold coins, and they didn't know if they were breaking the law, because in 1933 there was a stipulation that said coins that are deemed to be of special value to collectors of rare and unusual coins are exempt. Well, what is the government's definition of rare and unusual? What does that mean? Nobody knows what that means. And so they were continued trading these gold coins in the 30s, in the 40s, in the 50s, and no one knew if they were breaking the law. They didn't know if these gold coins are what the government would identify as rare and unusual. So in the 50s, the coin industry, including coin collectors, not just businesses, lobbied the federal government to define rare and unusual. And no other bullion company is going to tell you about this. In fact, I haven't seen it anywhere else besides here. And there are two statutes. The first statutes we were able to get defined in the 50s, and it says all pre-1933 U.S. gold coins are considered to be of rare and special value to collectors of rare coins. That's not in fact, hold on, let me read it to you exactly. It's section 54.25 of Title 31 in the Code of Federal Regulations that says gold coins made prior to April 5th, 1933 is considered to be of recognized special value to collectors of rare and unusual coins. So in layman's terms, that means that the government views any pre-1933 U.S. gold coin as rare and unusual. It doesn't have to be a $4,000 rare coin or a $3,000 rare coin. You don't have to be a collector. You can buy a lot of these pre-1933 U.S. gold coins for right around the same price as gold eagles. And according to the government, those are rare and unusual. So think about that. They're not necessarily rare and unusual, but according to the government, they are. And those types of coins will give you much greater protection in the event of a confiscation than having gold bars or gold rounds or anything of that nature. Now, there's the second statute was added in the 60s because people were importing these foreign gold coins and they didn't know if they were breaking the law. And so they approached the government in the 60s and got another statute put into U.S. law. And it's Part C of Section 54.25, Title 31 in the Code of Regulations says that gold coin made later statutes were added saying that foreign gold coins minted before 1959 are to be viewed as rare and unusual as well. I don't have the exact lingo, but those statutes were put in the 60s. And basically what it says is that any foreign gold coin minted before 1959 is considered to be of special value to collectors of rare and unusual coins. So the government has defined and given you a roadmap. If you are worried about a potential gold confiscation, well, there are two examples in U.S. code that pertain to this very subject. And what they say is if you want to protect yourself, buy U.S. gold coins minted before 1933 or foreign gold coins minted before 1959. Why is that important? Because they would have to change a statute to take those coins. They don't have to change a statute to take your gold bullion. They don't have to change a statute to take your gold eagles, your gold maple leafs, your gold bars. And people say, like I mentioned earlier, well, I'm not going to give it to them. That's fine. They're not going to come and take it. What they're going to do is make what you have basically worthless and make you keep it for years on end in order to trade it freely. But according to the laws as they're written today, if there were a gold confiscation tomorrow and these laws weren't changed, I would assume and think that there's a 99.9% chance that if you've got U.S. gold coins minted before 1933 or foreign gold coins minted before 1959, that you will be able to legally trade them. At least you were when it was illegal to buy and sell Cougarans in 1972, or it was illegal to buy gold bars in 1971. You could have been buying pre-33 U.S. gold that whole time. You could have been buying pre-59 foreign gold that whole time in the 70s when it was illegal to buy anything else. And that's the reason why, if you have a concern of a potential gold confiscation, you want to stick with those two statutes. You can read about it. I've written about it many times. There's two articles of mine that cover that subject. One of them is what low price, let's see, what is the title here? It is what gold and silver bullion dealers aren't telling you. But thank you guys for the information tonight. Thanks for the questions. I'll be back in 2 weeks. Give us a call at austincoins.com, 800-928-6468.